My fellow traders, what's happening? I hope you guys had a great day today. Um, that you're finishing this week up strong. And it was a really, really interesting day in the market. We're going to talk about that here in a minute. But the first thing I want to share with you is you got to understand there's always and you always have opportunities in the stock market. There are opportunities. There's an abundance of opportunities. The thing is, you have to put yourself in the right position. You have to be in the right place. You got to have an edge, a process that you're going to come in and that you're going to engage in the market with. And you just wait for those opportunities to come. And they will come. That now they probably won't come when you want them all the time. And it may be a day that you have to wait for the next opportunity. But there's always going to be opportunities. And if we stay true to ourselves and stay the course, we're going to catch it. The problem that I see that especially a lot of new traders have is, if they take a loss or they take multiple losses and they can't seem to get on the right side of trades, they tend to lose any confidence that they had in themselves that they came into trading with. And it makes it really difficult to build that confidence that you need in yourself and in a strategy. We talked about this a couple of days ago. So we have to remind ourselves that there's always opportunities. If we mess up today or we miss an opportunity today, we come back tomorrow. We work on putting ourselves in the best position again, and we wait for the market to give us the opportunity. Now, we don't force it, because we all know what happens when we try to force ourselves on the market. But just keep telling yourself, I'm always going to have opportunities. You have to have, what do they call it? An abundance mindset. Knowing that, it's okay if something doesn't work out, or this trade doesn't work out, or that trade doesn't work out. There's an abundance of opportunities in the market. And we just have to put ourselves in that position. And it all starts with knowledge. It all starts with knowledge. Understanding, understanding the market, understanding how it works, learning a strategy or a couple of strategies so you can have an edge, a process that you're going to come into and engage the market with, that you're going to do every day to put yourselves in the best place to take advantage of the opportunities that the market has. So just remember, we always have opportunities. So today, we started getting the sell-off that I've been waiting for, but I didn't want it today. I didn't want it tomorrow. I wanted to get this last swing trade nailed so we could close out the month. I think I only have 3 swing trades closed, and I'm in the last one we'll look at in a minute. But I know the market needs to pull back. I know it needs to rest. And I was thinking that we were going to pull back and test the 50. Now, if you look at the Qs, QQQ it's already taken out the 50. The SPY hasn't. So we're still holding above the 50. If tomorrow we take out and close below the 50, and then Monday confirms it, we may be pulling all the way back. We may be looking at, and I don't know why my numbers got dark. I can't even see the prices on here. But we'll be coming back. So I think tomorrow is going to tell. I think it looks like we're going to be selling off overnight. I think we're going to wake up to probably a gap down. It may even be gap below the 50, when we wake up in the morning. But I think, the rest, the pullback is here. How big it's going to be kind of remains to be seen. 50 is the next test. And if we take out 50, I think we're coming all the way back to the 100-day. So that's just my prediction. So take that with a grain of salt. I'll know more after tomorrow as to what I'm going to look for and what I want to expect on Monday. So I'm going to run through the swing real quick. We're going to look at some stocks from that I traded yesterday. Had a really bad day yesterday and shouldn't have, but I set myself up for that right out of the gate. We'll talk about that and then we'll get into the day. But here's a swing. We're working on 2 weeks now, and I've already survived one pullback. I'm not holding through enough. Okay, if we come back, price is at 90, 96. Well, let's say my entry was 91. I'm probably gonna put my stop there if it hasn't taken it out. If it hasn't taken it out by tomorrow morning, because you can see we closed at 92.19. And I'm just going to close it. If it comes back, I'm going to close it at break even, because I don't know if this market's just going to continue to sell. We're going to get some panicking. Who knows? But I was really hoping that I would have at least one good swing, but the market just hasn't been there this week. And if we're selling, we're not going to be in the cycle to take any long swings at the beginning of next week either. So we just have to wait for the market to come back and be ready to strike. And that's the name of the game. We just wait for those opportunities to come. Right now, the market's not in the right phase. We just need to put ourselves in that position so that when it happens, we're ready to take advantage of it. All right, so yesterday, here's where I messed up. I've been messing with this strategy where I get in early on a break of the pre-market high or low and take that initial hit. Because a lot of times, when stocks break their pre-market high or low, you get a quick 3 to 5 point pop or sell off, and you take that really quick, and then you come back in and you get reset. And it works, pretty good. It's got the same success rate as any of the other strategies I have, but the problem is you incur a lot of risk with it. So it's the more I think about it, the more I realize this is not something that you would want to trade with a small account. And so I'm not going to do this, in the room anymore. It's just like with the aftermarket earnings plays. Those are not really set up for small accounts because of the risk. Now, trading the secondary move after earnings are announced, on the stocks that have the volume, we can do that all day. But trading these higher risk stocks, this is what can happen. This doesn't happen often, but this is a strong possibility that can happen. I got in on a break of, here's the pre-market low. I got in on a break of it. It dipped down for a little bit, and then it ripped back up in a matter of seconds. It ripped back up, and I found myself down $4 on a 300 share position. Now I know that's not hard multiplication. That's $1,200 hit, right out of the gate. And I'm sitting there with my mouth hung open. And you look at this chart and say, yeah, man, but it came back. Who the hell is going to hold this 6 points against them on a 300 share position? It just doesn't make sense. I mean, I had to bail out as it was running up because it just kept going. I had to bail out of it. But it popped up so quick that, and you can't really put stop losses in this because it just doesn't work. But I put myself in this hole, and I almost wrecked myself. I had to stop. But you can see I took this later in the day on a channel break. I just got patient when it broke the top of this channel. These are the type trades that are more conservative, but you incur less risk by taking these types of trades, and they do add up. So later in the day, I did take a channel break here. It turned out to be just a base hit here. I thought we were selling. We were pulling back. I was looking for a move back to the 50, but it caught. Even though it confirmed a loss of the 20, it caught itself and it started pushing back up. So ended up having to stop out of it. But what got me going was I probably should have stopped after this and just kind of cleared my head a little bit. But I ran and I jumped in SQ because it was setting up. Here we were making an opening range low. I got in it. It took me out, max loss. Again, you look at it, I got in at 238.25, over 1.5 points. And it did go up and it came back down. It did make the move. But I couldn't risk it. I had to stop out on my max loss, and it really would have put me down. So now, I'm down, maybe $1,600. I don't know it. I'm not adding the numbers up in my head. I probably should have. But all I know is I'm trying to get myself back. And I'm just chasing trades. I'm not waiting for trades. I started trying to chase stuff. And so brings us to Facebook. And, here's one a little bit after 10. I waited for the opportunity. Once it broke, I got in. It did kind of mess around a little bit, but I was able to take profit here. Now, this is the same order. What happened was this dipped down and it filled half the position and it bounced back up. And then here, this candle opened, bounced up a little bit, and it sold off and it hit this. It hit the second order. Then we sold off and we aggressively got bought off this level. I mean, this is an aggressive buy. I knew we had a reversal coming, and I probably should have traded it. That's why I bailed out here. The entry on the reversal should have been right here. and I really should have traded it, but I just wasn't all together there. So I ended up yesterday down just over 800 bucks. It could have been really, really bad. So I did make on the good trades I did do. I did make back about half of what I had initially lost, which is okay. I probably could have made more back, but I just wasn't right after that. I just wasn't right. And then the internet went out toward the end of the day. I think just around 3 or maybe a little bit after 3, the internet went out, and it didn't come back till almost 5 o'clock. And at that time, well, I know it was after 4. At that time, I saw GME running up, and so I played with GME after market, which turned out to be a really good trade. If you were in chat, there was only a handful of people still left. The degenerate traders like me, you guys got to see it. And I traded it till 8 o'clock. At 8 o'clock, right at 8 o'clock, before the market closed, maybe 10 seconds, is when I took the last cover of that. So the day ended pretty decent, but me trading after market, but this is the day. This is the day. So I was down 800 and some dollars. I didn't get a chance to take the P&L because I was doing this around midnight, and the darn thing reset before I could even get to it again. But I did lose 800 bucks. If you add it up, some of you guys can add up all of that stuff and you'll see exactly what it is. So today I traded, this is not the first trade. Well, this is the second trade I took. We'll look at this and then we'll go to Facebook. But ever since I switched back and stopped trading with that zero commission broker TD Ameritrade, which I have a bad taste in my mouth about now, I'm back to my normal self. I'm sticking to just a couple of tickers, and I'm trying to maximize the moves. So, here's BBY. This is not the first trade of the day. I'd already taken another trade. So what I was looking at here was we broke down below all of these moving averages. We tested the 20, like 4 candles. So as we came down and we broke the low, I got in. I'm like, look, this is a traditional trend continuation setup. We're inside of a channel, but look at the channel. Here's the bottom. There's the top. Look at that huge channel. So I'm like, coming down, I've got all of this room to make profit. So I get in it. I hit my first target. Of course, it bounces and stops me out, takes me out, break even. Then I get in once we break the channel that we put in, this micro channel that it put in. And I could have marked the top of this up here. This was a micro channel. Once we broke it, got the first target, which was, this pre-market level here. And it bounced. And I took it off, break even. And then we sold off again, under the 5-minute opening range low. But it didn't really go anywhere. After that, you can see it just kind of traded sideways a little bit. It kind of went sideways all through here. I know I got it covered up, but that was that. So Facebook was the one that I traded the most of. And here's first 5-minute candle. I got in on the break. First target, It kind of messed around here for a little bit. I started getting that feeling of just taking it off, but I let it go. Got the second target, and then we pulled back, got stopped out at break even. But what happened here was I only had 50 shares left, but my stop was for 100 shares. So when it hit my stop, it bought 50 shares to cover, and then I ended up buying, I'm sorry, it sold 50 shares to, take me out of that position. And then the extra 50 shares turned into a buy order. So it actually bought 50 extra shares. And that's because I didn't change my stop. My stop still had the 100 shares left. After I took this, I put my stop right here for 100 shares. I just never changed it once I took 50 off up here. So that was just a mistake, a little mistake I made. Didn't really cost anything. Here, bottom of the channel, this was a pre-market low. And the bottom of the channel, this pretty much lined up. I got in, took some profit off here, 259.80 around this level here. Then we bounced. Again, stop out, little base hit, stopped out at break even. As we came back through, got in again. This time, stopped out. And then I got back in. And like, look, you starting that crazy shit again. Just let the trade work. And so I got in, ended up working, hit the first target. And of course, it bounced and stopped me out at break even. I was frustrated by then, ready to go eat. And look, I'll go eat, and it makes the best move out of all of this crap. It makes the best move, so I missed it. But later in the day, I came back, caught this channel break, and hit the first target, and ended up getting stopped out. Base hits. All base hits after the morning. But what do base hits do? They add up. They add up. This is why this is the core of the trading and growing a small account program. The core of it. Putting these two strategies together, building a trading process that you could come in the market with and execute every day. There are a few days where we don't get the opportunities because the market trades sideways or whatever after the first 30 minutes. But there's opportunities that are there. We just have to make sure that we're putting ourselves in the right position. And that's what this is all about. So today, 865.25, not bad. A series of base hits, a couple of stop outs, sticking to your stops. I just execute. Even if I make a little operator error, just execute. And that's what it takes, guys. That's all it takes. So we're going to be ramping this up. I'm behind on the small account thing. I promise you, we're going to be ramping it up. I know you guys are ready to get going on it. The ones that want to hear it and want to pay attention to it. And even if, and like I said, a small account's not just trading a couple $1,000s. If you have less than $30,000, $40,000 in your account, you need to trade with a small account mentality because you're going to need to grow that account. And when you get that growth mindset, you're going to be paying yourself before you know it. So that's what it's all about. So you guys have a great night, and I will catch you first thing in the morning.